Hi everyone, it's December 18th, 4:25 p.m. Pacific time, which is 7:25 p.m. Eastern time. Right now what you can see on my screen here is the S&P futures. I'm going to talk about the futures first before I go into the positions and look for some setups. The S&P futures obviously had a significant low placed in October 13th, and from that low it's moved, gravitated toward the 200-day moving average, and technically speaking, a trade above the 200-day moving average would be a bullish market, and a move to the 200, and if it chops around there, starts to roll over, then obviously we're going to stay and stays under the 200-day moving average. We're looking like it's going to be another bear market. At the moment, what I can see here that would make this market really bearish, the formation here is a pop into the 200 and then a double bottom to retest that October 13th low. Okay, so that's what we're up against, because it failed to trade above the 200 and the path of least resistance is south. So if that's the case, then there's gonna this 50-day moving averages that's acting like support is gonna break, and then it's gonna break such that it's gonna chop its way all the way down back to 3,500, double bottom, and then who knows if it just keeps on trading sideways from there on. So if we look at the only supporting evidence that I see that the SPX will be moving, the SPY will be moving lower, is basically this gap here at 3,812, 3,744. That's the gap that it created on that CPI data. You can essentially see the red bearish candle, assuming the path was going to move lower. It kicked, okay, meaning that it opened above the opening right here. So the previous day it opened up even higher, where it closed at 3,750-ish. It did a 180 and kicked, basically kicking your teeth in, and moved in the opposite direction, pushed right toward the 200, and then you can see the weakness that comes in after another set of data from CPI and JPOW. So the path of least resistance from JPOW, and then also the comments made from that announcement, has created a shift, and that shift is producing momentum that is likely to fill this SPX gap at 3,821. Now, if you step back and look at all the gaps, you can see why a lot of the YouTubers will probably talk about how dire this market is, and we're going to go head a lot lower down to 1,700, which is possible. Anything is possible, especially when you have events that could cause a black swan event, right? But I think a 1,700 drop, the SPX moving down to 1,700, would raise some serious concerns. I think it's better just to not forecast out into the future and just think about the markets 1 week at a time. So by doing that, then I'm only focused on the short-term gaps that I can see here that are probable, and that's the 3,744 gap in the SPX. Now once that gap fills, you can see that there's another gap here at 3,961, and then there's another gap here, 4,200-ish, which is supports the gap that's in the futures market. So I don't know if you heard me talk about gaps in the futures market, but these are big deal gaps. Okay, these don't happen very often, and they tried to fill it on the last CPI. Seems like, I mean, you're taking some pretty good risk here at the 50-day moving average. Keep in mind, markets can dip a little lower, but the lower it goes, the contracts for the 4,225, I don't know exactly when that's going to fill, right? all I know is that it's probably going to fill on an economic report. But those SPX gaps, if I say, let's say it's going to fill, I don't think it's going to fill in the first week of January. First week of January is pretty wonky, but let's say it fills sometime in January. Right, they're actually trading at January monthly contracts are trading at $3.30. To that's the bid, and the ask is $4.40. Okay, so then if it gets above there within 30 days, then you've got a pretty good, you got profits coming in as it fills, because at the money calls, let's say if it fills within the 16 days, they'll be worth about $58 at the money. Okay, so I know there's going to be, you want to be trading in and out of these markets, and that's fine. But I mean, if you have a good setup with using the wolf waves, you can feel free to scalp. I think the main focus is this 4,225 gap. That's the big trade in the next one or 2 months, especially with January being such a bullish month. Now, going back to what I said about this double bottom, you can see that this market has been just creating this crazy looking channel, chopping like crazy, and it could move even lower down to 3,466, taking out the previous low October 13th. So that could happen, right? And all I'm seeing right now is we have this TTM squeeze. It's in cycle 1, and then cycle 2 and 3, that's when it starts to reverse into 2 and 3, right? 2 and 3 by definition is the transition, the day from that'll be Monday, the last hour on Monday and the first hour on Tuesday is the transition from cycle 2 to 3, and then 3 starts basically on the last hour of Monday, and then we should see the reversal coming in, and then you can kind of see also that the 6-day moving average is distant away from the current price of where the future is trading. So there could be a reversal and then another push back above the 200. The 200-day moving average is flattening, so if it does flatten out and it continues to chop, right, building up a base here, then it's going to base and break out. Okay, and then you got this wick here that I tried to chase last week. That's the breakout point here, 4,188, and then you'll know that once it gets anywhere close to this, the base of that pole, that wick at 4,045, it's going to start running pretty quick off a 7-8 minute TTM squeeze. I'll be looking and monitoring some wolf waves to see when I can catch this, but preferably one of those economic next week or this week. Actually, there's really nothing going on Monday, Tuesday, and Wednesday that's going to cause the market to move up to 4,225. That's almost a 9% move. None of these things are going to do that. 2 to 3% moves, maybe we can get that from initial jobs claims or maybe from core PCE. Those are the two that could generate a 3 to 4% move, and then after that we get a series of green days for 2 or 3, which would maybe equate to 2% each, maybe 3% in total of percent per day, so 3%. That would make a 6% to 7% move from either Friday, Thursday, going into the weekend, Christmas weekend. All right, so right now it's really hard to say which way when this market is going to break out. The path of least resistance is obviously going to be lower to fill that SPX gap at 4,744, I believe. And then once that gap fills, that's when things will start to move. The sentiment might change. Okay, so talking about my current positions, I have Boeing. Boeing has been in this uptrend, and you can see these gaps. Okay, so I'm looking for a psychological fill move to 200, and then that gap at 208. That's a pretty big move. I mean, Boeing, when it does move, it moves around 4%. So when it does make a 4% move, hopefully on Monday, then I'll be looking to manage those positions that I'm in. Otherwise, if it opens up under 185, I'll be closing out those positions, because then I know that the 178 gap is going to be in contention. I also have we have news on Tesla that's just been released, but I don't have any positions. I think it was the news on the Twitter poll. So I'll be looking to see how the pre-market is trading. But my other position here is a kicker on Meta, aka Facebook. And on Friday, it had an upgrade and it kicked. So it closed at 116, and then it just kicked 180 right above 118 and opened up at actually 120 and pulled back. So kickers are pretty powerful. I'm gonna see if the market is weak, then the 118.65 gap is gonna fill, which is not too bad. I'll still continue holding these positions into Tuesday, because once this fills, I'll be looking for some end of the day rally strength to push it back up and close above 120, and then try to break out to fill this 128 gap that it's been trying to fill on that kick. So this kicker is around 7% move. So I'm looking for at least a 4 to 5% move between Monday and Tuesday. And also for Boeing, the same thing. I'm looking for a 4 to 5% move before I start managing those positions at the open tomorrow. Okay, so if Boeing, so I have two positions tomorrow. If Boeing starts to open up in the pre-market lower, then I'm going to cut those things out pretty fast, because then it's just going to move in the opposite direction and then just trade absolutely light throughout the whole entire day. That's not what I want to be watching. And then for Facebook, I'm willing to hold this for a little longer. I did buy some time on that. That expires next week. So that I'll hold on to for at least 2 to 3 days, because it did kick, and technically kickers are very bullish. And I expect it to actually fill the 128, 130, 128 to actually move toward the 130. And then you can see that the Darvis channel here has been showing some upper and lower range where it could break out. There are some pretty nasty gaps all the way down to a 98 to 92. I'm hoping that if those gaps do fill, I think it's going to fill once it reaches here, and then it rolls over and dies on earnings. Okay, so thank you very much. Well, let's take a look at Tesla. So Tesla got the Elon Musk tweet about a poll regarding the CEO responsibilities at Twitter, relinquishing his role, maybe focusing whatever in Tesla. But that was a bearish engulfing candle. Let me turn off the toss option algorithm. And bearish engulfing candles in a bearish market is actually counterintuitive. So I think that could end up becoming an inside day tomorrow based on the news. We'll see what happens, but I think if the news is significant enough, it could open up the 145 inside day. Okay, if it doesn't, then then you got that gap there, 137. So if it opens inside day here, 154, it's still in the downtrend, and it could just end up becoming a doji, making it look like a BLT with a BLT inside day candle, and then another red candle to fill that 138 gap, maybe on Tuesday and Wednesday, I don't know. So this has been a pretty fresh. You can see that a lot of devout Tesla shareholders have been pretty much in pain because Tesla stock is down about almost 70% from January. Thank you very much, and have a great evening.